Thank you, Mark, and hello from London. Well, when I spoke last week, there were a veritable cornucopia of weekly technical patterns. There were then 12 weekly key reversals plus 5 monthly key reversals for October. My time then was limited, so I hope you managed, or I managed, to get across key points on the weekly and the monthly key reversals. So now we come to this week, and there have been a lot less actions, but the ones we have seen have been interesting ones. In the currencies in Aussie yen, we had a weekly key reversal down last week, which has followed through lower into this week. We also had a weekly key reversal down in one of my favourites, US dollar against the Brazilian real. This has also seen a follow through lower this week, only halting yesterday at the middle time, currently 548.20, of the important late July to late August shallowly bullish Andrews pitchfork. Today we've already moved lower, and we're now looking at the next supports. These are the rising short medium moving average, currently at 541.60, and the 250% Fibonacci lines for May to June 2020 at 539.28, and the one for 2021 so far at 538.46. If these go, then we'll have to start looking at the big long moving average, currently at 536.04. The final weekly key reversal down in markets I cover was in the sugar white premium. This was a major move below supports at 80 1/4, 77 1/2, 75 1/4, and 73 3/4, finally halting at the middle time of the big old May 2020 to February 2021 bearish shift pitchfork, currently at 68 3/4. It was supported there this week by the rising short medium moving average, currently 68 even. This has been enough support that we've had a recovery of sorts this week, right up to just over the 50% Fibonacci line for 2021 at 73 3/4. This has been an interesting reaction. You would have noticed that the middle time was already a bearish support, dropping by about $0.50 a day. So any recovery from such a declining support needs to be treated with a pinch of salt, or maybe a pinch of sugar in this case. Now, as for the weekly key reversals up. We had a weekly key reversal up in German Bund futures, which have been seen some limited moves higher this week. We also had a weekly key reversal up in an emission future, the December contract on the ICE EUA carbon futures, of which we've subsequently seen a follow-on higher this week. And finally, spot gold, of which we've had a nice follow-on higher this week. That would normally just about cover it here, but I wanted to draw your attention to some of the freight indexes. These didn't have any weekly key reversals this week, but any of you who have been seen or listened to me or Mark will know that I have highlighted some major moves happening in some of the Baltic freight indexes 2 weeks ago. Well, I just wanted to give you an update on these, as some of the moves seen here make the moves in Bitcoin and other cryptos look like child's play. To start with, in the Baltic Exchange Panamax index, I had pointed out a weekly key reversal down 2 weeks ago. At the time of my broadcast, the market had dropped about 16%. Now, today, after 2 and a bit weeks, the market from its height has dropped about 28.7%, though it is showing signs of leveling off at the moment. In the Baltic Supramax index, we had a more ominous pattern, a monthly key reversal down. At the time of my previous commentary, the market had dropped about 19.5%. Well, as of last night's close of business, prices had dropped about 37%. Yes, 37%, in a period of about 3 weeks. Finally, my favourite in freight, and the reason I started tracking freight indexes in the first place, the Baltic Handymax index. Here we had a weekly key reversal down 2 weeks ago, with a move down at my last time of commentating of about 9%. Well, as of last night, we've seen a drop from the height of about 19.25%. Amazing. All within 2 and a bit weeks. That's it. I'm always happy to answer any questions of anyone who is interested, and with that I'll finish this section from London. I hope you found these comments useful.